Hello everyone, my name is Oliver from Lux Trading, and today I'll be showing you 5 different strategies that you can deploy in your own trading. So, let's pick the right strategy for you. When choosing a strategy for the first time, it helps to know what kind of trader you are, what's your strengths, what's your weaknesses, and what strategies exist. However, it's not as simple as deploying a single strategy, as traders can combine and use parts of multiple strategies that suit them to create their own. Firstly, you must define your criteria for selecting a trading strategy. You should analyze criteria that can help narrow your search down, such as how much time can you set aside for trading, what instruments do you want to trade, what position sizes you want to trade, and whether you're going long or short. For the following 5 strategies, you'll need to already understand what support and resistance levels are, so I'm gonna assume you know that and move forward with our first strategy, the bounce strategy. Many forex traders believe that levels that were important in the past will be important again in the future. This follows the logic that if the market was going down and then it hit a support level and bounced back up, the market saw that as a good place to buy, and therefore such level would be a good place to buy again. So if the forex pair slips back to that level, it could be seen as a good trading opportunity for you. Number 2 is the running out of steam strategy. Similar to analyzing support levels, traders also analyze the resistance levels. The resistance level is a point where the market turned from its previous peak and headed back down. If a market is appreciating but then the price suddenly drops down, the overall view is likely to be that the price was getting too expensive. This forex strategy is a mirror of the bounce strategy. We are looking for an asset to be appreciating but ran out of steam as it's approaching a resistance level and then head back down. And that is the moment where we're looking to sell or short and profit from the price going down. Such strategies based on previous highs and lows can make risk management relatively straightforward for any trader. For instance, if we're looking to bounce off a level, our stop loss can go below that previous low point. If we are looking to sell short once the market starts to slow down near a previous high, then many traders will place their stop loss right above the previous high. Now I will show you an example of what that might look like. In this example, you can see how a high from the previous day in the Australian dollar US dollar currency pair ended up being the place where the market ran out of steam the following morning. Therefore, we can see that a level that was important the previous day turned out to be important again the next one. Our next strategy is a breakout strategy. Resistance and support levels are dynamic and they're prone to breakouts in either direction. If the price exceeds important support or resistance levels, it is likely to break out. Many traders would see this as a potentially important change in market sentiment. Previously, when the price was up at that high, the sellers moved in and the price fell, suggesting the market had reached an overvalued level. If that old high is breached, also known as breaking resistance, then something has clearly changed. Traders are now happy to keep on buying when previously they thought the price was too expensive. This can be an effective trading strategy for catching new trends. When direction in the market changes, the breakout strategy is usually one of the first signs. Opposite of the breakout strategy will be the breakdown strategy. Similar in function but opposite in the direction to the breakout strategy is our breakdown strategy. This trading strategy is designed to jump aboard a move when the market slips below a previous support level. Once again, many traders would see this as a change in the market sentiment. Suddenly, a level where buyers were happy to buy as they viewed market as cheap and expected it to rise has been broken. The breakthrough of what is seen as a support level can be seen as a great opportunity to enter a short trade. Let's see an example. The example shows US dollar Japanese yen on an hourly chart. It is an important example as it demonstrates that in the real world, even the best trading strategies do not work all the time. There's a false signal, highlighted by the circle, before the effective signal, which is highlighted by the black arrows, that saw the market really start to fall. And our last strategy for today is the overbought or oversold strategy. The strategies that I've mentioned so far have been based on chart patterns and the use of support and resistance levels. But our last strategy takes more of a mathematical approach. It is using something called the Relative Strength Index or RSI. This belongs to a family of indicators that are called oscillators. They're so called because they oscillate as the markets move. They go up and down. When the RSI is above 70%, the market is thought to be overbought. This means that it could be getting a little overstretched, and some traders will see it as a signal that the market will fall soon. Whereas on the opposite side, the market is thought to be oversold once the RSI crosses 30%. Traders will be watching closely, expecting any weakness to run out of steam, and for the market to turn right back up. The Forex example in this chart highlights some of the buy and sell signals that came from an overbought, oversold strategy on a daily Euro-USD chart. We can see that in February, the price has crossed over 70% RSI, and that has been followed by a drop in the price, right up until it hit about 30% RSI, and once it crossed under that threshold, the market became oversold, and a lot of traders expected the market to go up again, which pushed the price up, and if you were there at the right time, you would have been able to profit. So these have been the 5 strategies for today. If there are any strategies that you would like me to talk about, please leave them in the comments. And if you want to learn more about Lux Trading, feel free to contact us on our 24/7 live chat or send us an email at info@luxtradingfirm.com. I wish you all a successful day trading and have a great one.